Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the potential of artificial intelligence stocks NVIDIA and Broadcom, and why Wall Street analysts see substantial upside in these companies. But before we dive in, let me share a little-known fact. One of these companies is projected to become the most important tech company of our time, and the other is quietly building a monopoly in a critical tech sector. Curious to find out which is which? Stay with us until the end to uncover these insights and much more. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. NVIDIA and Broadcom have been attracting a lot of attention from savvy investors, and for good reason. Both companies are prominent players in the semiconductor industry and have significant stakes in the rapidly growing field of artificial intelligence (AI). Let's explore why these stocks are considered hot picks and what investors need to know about them. NVIDIA, ticker NVDA, leading the AI and data center GPU market. NVIDIA is renowned for its cutting-edge graphics processing units, GPUs, which are essential for rendering realistic computer graphics and accelerating complex data center workloads, including AI applications. NVIDIA's dominance in this space is staggering, holding over 95% of the market share in workstation graphics processors and more than 90% in data center GPUs. Specifically for AI, NVIDIA's chips are pivotal, underpinning all of the most advanced AI systems. With an estimated market share exceeding 80%, NVIDIA's leadership in AI is significantly bolstered by its CUDA, Compute Unified Device Architecture platform. CUDA is a parallel computing platform and application programming interface (API) model that leverages GPUs to accelerate various computational tasks. This ecosystem includes hundreds of software libraries, which greatly simplify model training and application development for AI. No other chipmaker offers a comparable suite of supporting software, making NVIDIA's position in the market exceptionally strong. In the first quarter, NVIDIA reported remarkable financial results. Revenue soared by 262% to $26 billion, and non-GAAP net income skyrocketed by 461% to $6.12 per diluted share. This impressive performance is expected to continue as the AI market expands. Notably, CFRA analyst Angelo Zeno has stated that NVIDIA will be the most important company to our civilization over the next decade. The company's innovation is a key driver of its sustained success. The upcoming NVIDIA Blackwell GPUs are designed to offer 4 times faster AI training and 30 times faster AI inferencing compared to the previous Hopper generation. This kind of rapid innovation keeps NVIDIA ahead of its competitors. As Rosenblatt analyst Han Mosesmann put it, the new Blackwell GPU platform, which ramps up later in 2024, is likely the most ambitious project Silicon Valley has ever witnessed. Wall Street analysts are optimistic about NVIDIA's future, expecting the company to grow its earnings per share by 33% annually over the next 3 to 5 years. While its current valuation of 68 times adjusted earnings might seem high, this premium is justified by NVIDIA's leading position and growth prospects. For patient investors, NVIDIA represents a compelling opportunity to outpace the broader market. Beth Kendig at the IO Fund has set an ambitious target for NVIDIA, predicting the company could reach a $10 trillion market capitalization by 2030. This implies a 230% increase from its current market cap of $3 trillion. While this target is optimistic and hinges on many variables falling into place, it underscores the substantial upside potential analysts see in NVIDIA. Adding to NVIDIA's potential, it's crucial to understand the broader implications of its technologies. NVIDIA's GPUs are not just about gaming. They are fundamental in various industries, including healthcare, automotive, and finance. For instance, in healthcare, NVIDIA's AI technology is used to accelerate medical imaging and drug discovery. In the automotive industry, NVIDIA's platforms are essential for developing autonomous vehicles, providing the computing power necessary for real-time data processing and decision-making. In finance, NVIDIA's technology aids in high-frequency trading and risk management through its ability to process vast amounts of data quickly. Furthermore, NVIDIA is pushing the envelope with its advancements in AI research. The company's investments in deep learning and neural networks are paving the way for breakthroughs in natural language processing and robotics. These innovations are not only enhancing NVIDIA's product offerings, but also setting new industry standards. But before we proceed, here's a fun question. Did you know that the stock market can predict recessions more accurately than economic experts? What are your thoughts on the stock market's predictive power? Drop your comments below. Broadcom, ticker AVGO, a dominant in ASICs and networking chips. Broadcom is another major player in the semiconductor industry, with its business divided into semiconductor solutions and infrastructure software. The company generates revenue from developing chips for wired and wireless networking, data center storage, and other markets. Broadcom is particularly strong in the application-specific integrated circuit (ASIC) market, holding a leading 35% market share, with its closest competitor, Marvell Technology, holding just 12%. Broadcom's leadership extends to networking and wireless chips, positioning it well to benefit from the growing adoption of AI, which is driving demand for both ASICs and networking chips. Analysts at Goldman Sachs have highlighted Broadcom's critical role in the AI infrastructure build-out, alongside NVIDIA. In the second quarter, Broadcom delivered solid financial results, beating estimates on both the top and bottom lines. Revenue surged by 43% to $12.5 billion, driven by robust demand for AI chips and virtualization software, while GAAP net income declined by 46% to $4.42 per diluted share due to costs associated with its acquisition of VMware. Non-GAAP operating income rose by 32%. Broadcom is sometimes overshadowed by NVIDIA, but its strong position in ASICs and networking chips should drive significant revenue growth in the coming years. Management expects AI chips to account for 25% of its semiconductor solutions revenue by 2025, up from 15% in 2023. Despite its strong position, Broadcom's valuation is a point of concern. Wall Street expects the company to grow its earnings per share by 17% annually over the next 3 to 5 years. At its current valuation of 69 times earnings, Broadcom appears expensive, especially compared to its 3-year average of 32 times earnings. However, if the integration of VMware proceeds smoothly, earnings might grow faster than anticipated, potentially justifying its higher valuation. Joseph Moore at Morgan Stanley has a bullish outlook for Broadcom, with a price target of $2,292 per share by June 2025. After the planned 10-for-1 stock split, this target would translate to $229.20 per share, indicating a 70% upside from its current price of $1,605 per share. Broadcom is not resting on its laurels either. The company is aggressively expanding its portfolio with new products designed for the AI and 5G markets. Broadcom's advancements in chip design are set to revolutionize data transfer speeds and network efficiencies, making it a crucial player in the next wave of technological evolution. Now let's break down the pros and cons of investing in NVIDIA and Broadcom in a more conversational manner. Starting with NVIDIA, there are several compelling reasons to consider investing in this tech giant. NVIDIA is the market leader in AI and data center GPUs, which provides a significant competitive edge. Their financial performance has been nothing short of impressive, with substantial revenue and profit growth. Additionally, their continuous innovation, exemplified by their new Blackwell GPUs, ensures they stay ahead of the competition. The robust CUDA ecosystem further solidifies their position, offering unparalleled support for AI development. However, it's important to weigh these positives against some potential drawbacks. NVIDIA's high valuation means investors are paying a premium, which can be a risk if growth doesn't meet expectations. Their reliance on the AI market for future growth is another consideration, as market dynamics can shift. Lastly, while NVIDIA currently dominates, the tech industry is always evolving, and new competitors could emerge. Transitioning to Broadcom, the company offers a diverse revenue stream through its semiconductor solutions and infrastructure software. Broadcom's dominance in the ASIC market and its leadership in networking and wireless chips place it in a strong position to benefit from AI infrastructure growth. Their solid financial results and strategic acquisitions like VMware showcase their growth potential. However, like NVIDIA, Broadcom's valuation is relatively high compared to historical averages, which might deter some investors. The integration of VMware poses certain risks, and future earnings growth is somewhat uncertain, dependent on market conditions and the successful integration of their acquisitions. These factors need to be carefully considered when evaluating the stock. Both NVIDIA and Broadcom are well positioned to benefit from the growing AI market, but they come with their own sets of risks and rewards. NVIDIA's dominance in the GPU market and its innovative edge make it a compelling investment, despite its high valuation. Broadcom's leadership in ASICs and its diverse revenue streams offer significant growth potential, though its valuation also appears high. Looking at the numbers, it's easy to see why NVIDIA and Broadcom are catching the eyes of savvy investors. NVIDIA, with a current price of $124.30 and a market cap of $3.58 billion, has shown impressive stability with a 52-week range of $39.23 to $140.76. Its days range and volume further underscore its strong market presence. Additionally, NVIDIA boasts a remarkable gross margin of 75.29%, though its dividend yield is quite low at 0.2%. On the other hand, Broadcom stands out with a current price of $1,640.80 and a hefty market cap of $764 billion. Its 52-week range from $795.09 to $1,851.62 and substantial average volume of over 3.3 million highlight its robust trading activity. Broadcom's gross margin is solid at 59.95%, and it offers a more attractive dividend yield of 1.24%. These figures reflect the immense potential and stability these AI giants bring to the table. So, are you ready to consider adding these powerhouse stocks to your portfolio? Their future growth prospects look incredibly promising. Investors should consider their risk tolerance and investment horizon when deciding whether to invest in these stocks. Both companies have strong growth prospects, but it's essential to be mindful of their current valuations and the broader market conditions. Before we wrap up, here's a question to ponder. If you could pick only one stock to hold for the next decade, which would it be? NVIDIA or Broadcom? Share your thoughts in the comments. Thank you for watching Simple Investing Secrets. If you enjoyed this video, please like and subscribe for more content. Remember, this video is for informational purposes only and does not constitute financial advice. Happy investing!